Good evening, traders. It's Mark here from the Day Trading Room. 20 to 10 London time on the 28th of March to Monday. Hope you all had a very good weekend, a relaxing weekend. Sun was shining here for a change. Today, the title of this journal entry is going to be Another Day at the Office, because it was a good day. Not because I made a humongous trade, not because I made a fantastic amount of money, not because of anything like that, but because there were a few opportunities there and I capitalized on 85 to 90% of the opportunities presented to me that are part of my trading plan. As my trading plan contains several setups that I like to take based on the type of market we're in, the volatility, the range, and all the parameters that we look at. All I can do as a trader is sit and wait for those opportunities to present themselves in line with my trading plan, in line with my risk tolerance level, also that's been described in my trading plan, and take the trades. And that's exactly what happened today. And 3 trades for me, 2 on the Dow, 1 on oil. I missed the end because I decided to go early. I left early, so I missed this final push in the last 30 minutes. But nevertheless, so that was the as I said, about 85-90% of the setups presented to me. I'd say that was a setup there on the tick pullback to zero here, the pause, looking for a push. If not to the low of yesterday, at least to the gap fill on the cash, which gave you a quick 10. But anyway, every other setup that presented itself to me today, I took, and they're all profitable. It's not always going to be like that. All you can do is execute trades in line with your trading plan and strategy. So let's run through the trades. First of all, first trade for me today was on the Dow. Good strong open. Didn't get it onto the opening drive. Being a Monday, being a little bit unsure. As the gap also there wasn't really much of a gap. It was a bit of a flat open. The overnight range was relatively low. There was nothing. There's no real catalyst. We did have some data coming out at 3. So that was, my sort of plan was, okay, normally I'd probably look to join the opening drive on the first sort of pause, but because there was no gap, real significant gap, because there was, as I say, the overnight range was low. I just thought I'll sit and wait. I'll sit and wait, and we'll see what happens. We'll get a lot of information from the opening drive. We can also see, basically how everything's trading before the data, and then we can make a decision what we're going to do after the data. And my sort of theory was, okay, there's some strength there. If we get a bit of a deeper pullback after the data's been digested, then I'll take it. I mean, the strength, obviously, you can see from the general uptrend of the market there. You don't need any indicator or anything like that to see that there's a little bit of strength there, and also the fact that the ticks hadn't gone negative. I don't even think that was a negative reading. Hadn't gone negative at all. Not one negative tick reading, or if that was, it was very, very slight for the first 30 minutes. So that's telling you something. That's telling you that unless the data, the pending home sales, are significantly worse than expected, and also the market is sold, they can be worse than expected, and it can still ignore that. But unless the data comes out, in fact, scrap that. It doesn't matter what the data says unless the market sells off after the number. That's the thing to look for. It's how the price responds. Don't bother trying to interpret the data. Look at how the price responds. That'll tell you whether it's bullish or bearish. I know too many people who try to analyze the numbers, and when they come out, they make a judgment based on the numbers. Not everyone has the same opinion. Not everyone has the same opinion. Some people, it means other things in other markets as well. Like interest rates may change. There's too many permutations, and it's all about sentiment as well. So anyway, what was I saying? Right, let's get back to the let's get back to the topic in hand. The idea of the trade was to look for a pullback, assuming there was no heavy selling after the data, for a push to new highs. We've got the first little pullback here. It was a little bit early for me. The reason it was a bit early is because it just had the data at 3 o'clock London time, and we'd sold off from that data, not heavily, but we had. So I'm not going to stand in front of that because at the moment I don't know if that's going to pick up steam to the downside. I then see a further test to the high, so I think, okay, now it looks fine. It's not been the market has not been repriced to a lower position. The data hasn't been digested in a negative with a negative bias. So I'm ready for the long. All I've got to do now is look for some sort of trigger entry. And it happened to be this. We've got the lowest tick reading of the day, but we got an immediate pop back up. We tagged the VWAP, and there were buyers sitting there resting, waiting to bid that up. They bid it up, and I joined the momentum as we formed the second candle there. Literally looking for new highs. I was aware that we hadn't really pulled back a lot. I was wanting a new high in the tick. That was the premise of the trade, and I got that pretty much straight away, and I ended up taking the whole lot off. Should I have held a bit? Probably. Okay, in hindsight, wouldn't have got more out of it. But the premise of the trade was hit. I didn't really have a target in mind because we were above yesterday's high. Just got a strategy alert in my ear then. Sorry if I don't know if you heard that. Where was I? Yeah, yesterday's high had already been hit. I didn't really have a excuse me, a target in mind. 12,300 on the Dow Cash is within sight, but that's still another 30 points away. So I ended up using the tick to come out. So we've got the new tick, high tick reading there. A little scalp takes them off the table. Nice high probability trade. Next trade for me, short. Now, why did I take a short? I took a short because we'd had low tick readings, and if you look, these were the lower than the highest high tick readings. We're down to the minus 900s here, whereas we'd only just about approached nearly the 800s up here. So there's some weak sentiment there, and I waited for this to push lower, and then I wanted to see whether whether we'd push back up, which is what most people would expect, or we consolidate at the lows. Now, this may not look like much, but for me this is the confirmation I need. And yes, I had to sit with it for a while, but when it started to push up and you're expecting then shorts to cover, buyers to step in for the next leg up to maybe double top or to go to a new high, I don't think anyone would expect anything magnificent from it because the daily range was still relatively low at that point. But when we got that little move that pushed lower, then held, I'm taking a short. Why am I taking a short there? Because my risk is quantified and there's some targets in sight. At the end, I'm still looking for the cash gap. The cash gap was slightly out of sync with the YM gap. If I bring in a cash chart here, slightly different type of chart here, but just a little bit clearer. The cash gap here there was a good another 10 or 11 points in it. So there was room for that to come down to sort of this level here. There's a bit of room in the trade. Anyway, took that short, sat with it. As I said, my stop was above that high, really pretty tight, but valid. A tight stop can be valid when I don't want it to push again. If it pushes again, I'm not interested. So I sat with this thing. It just looked like it stopped. I kept having to move my windows around thinking that my data feed had stopped. It was awfully slow. It really was. We got a little pop up, nothing, absolutely nothing, and then we got the sell. And because we've been sitting so long, I got really impatient with it and ended up taking a good chunk of it off here. Because I was getting fed up with it. It was sitting around here. I thought my edge had started to disappear. I was expecting to roll over pretty quickly. So as soon as I got a few ticks, I ended up covering some to try and give myself a risk-free trade because I wasn't that excited about it. Anyway, rolled over finally, and finally got the 10 tick target on that. So, as I say, nothing amazing, but the opportunities presented themselves, and I took them, which is all you can ask. Let's have a flick over to oil. Okay, Absolutely nothing on oil in the morning. I I was tempted to take a short here as we touch this. This is the pit session, by the way. It's not the 24 hours; it's the pit session. I was tempted to take a short here as we tagged that, and actually that would have yielded quite nicely. But I'm being a little bit strict with my oil setups. The last few days, a week or so, haven't been as volatile. The very best setups are the exhaustion ones or the continuation on volume. They are the prime setups for oil. They work the best. They're the most profitable. They're the ones that give you the least risk. So I'm just sitting waiting for those really. Getting trying to get back in tune with the ebbs and flows of the Dow and then the S&P, and taking the trades on those, the fade type trades. But if I if I see one of those real grade A setups on oil, then I will take it. And I saw that later on in the evening. We'd failed to push to a new high, and that adds more fuel to the fire. We broke through the high, then started to sell off pretty aggressively. Not yet. I'm not interested yet. Not yet. Not yet. Pulled down to here, started to pull back, and I'm watching it from this point because I can see 104. I can see that's an obvious target for it. I can see that if we break that, there's potential for some stops to be pinged. And we push down, we pull back up. I think it was 23. I was watching this tape, watching the tape. Saw it stall. Saw what I thought was an institutional order coming on at 18. Took the short. By the time I got in on it, I got a fill at 13. Awful slippage on it. Sometimes that's the way it is on oil. Maybe it hesitated for a split second. That does cost you. So the risk was a little bit more than I'd like. But that's the way it goes sometimes. But it looked great. It was the first pullback, dwindling volume on the pullback. Then we started to get momentum again, and we pushed down. We As we came down to 104, it didn't really, I wanted another candle like this. I wanted a nice long candle, ploughed through the 104, took out all the stops, and I could come out in the high 80s. That was what I was hoping for. All in, all out, by the way. Not looking for anything extended on this one. Just looking for that final push after this little pause. We slowed down quite a lot, and my exit was at 104.02. So nice trade, nice little 2-minute scalp. Can't complain. It did then go lower and go into the mid 90s, but it popped up pretty quickly. And looking at it, I think if I'd have held, it would have been 98. So an extra 4 ticks if I'd have held on to it to break the 104. But as I wanted to come in all out, I didn't want to play around with that. So good trade. As I say, the opportunity presented itself. I took it. It was one of the preferred setups I've got at the moment on oil. So happy to get on top of that. But I just wanted to say, trading is a lot about, it's a lot of patience. You are sitting there all day waiting for your setup. I know we had it really great with oil the last a couple of weeks ago. It was active. There was setup after setup after setup. If you miss one, there's another one around the corner, and that's what happens when you get an emotionally fueled market. You get constant setup after setup, and you start putting in some really great numbers. But the normal day-to-day stuff, you have to realise when the phase of the market has changed, and even though oil, still got a 200-point range, what I do is what I said at the beginning of the year is, I'll move to oil when the volatility's there. Great, take the money, and then know when the opportunities aren't quite there, but just look for those premium setups. And in the meantime, back to the bread and butter, the comfy slipper, the Dow, or the S&P, or whichever I'm preferring at the time. But it is a case of sitting around. It's a case of being disciplined. It's a case of sitting on your hands. Do something else. Add some stuff to your journal. Come up with some new trading ideas. Do some more research. Do something completely different. You've got your screens in front of you. Read a book. Browse some websites. Do something, but be aware of what you're looking for. I'm waiting for the market to do this, I'm waiting for the market to do that, or I don't have any premise, I've got no levels in mind. All I'm waiting for are my reactive setups, which are like on the oil, the continuation of the exhaustion. So you've got a plan in your head. You're sitting there, you're waiting for the market to tell you to get involved. And that's what it's all about. That's, if you've got that, those are your rules, stick to them, and things can happen. So I've talked for 15 minutes on 3 trades. That's probably quite a lot of rambling for me. Anyway, I hope you guys did okay today. I hope you didn't get caught up in this stuff. Probably, maybe, if I could go again, would I have taken this trade? Probably not. I think there's a lot of unnecessary, focus for not a lot of effort. Not a lot of reward, should I say, but still was profitable. It was an okay read. Lunchtime hours starting to become the hour again to avoid, unless you're looking for that final push into that noon time frame. But yeah, um, interesting stuff. So good trading, guys. I'll be back with another video in the week. Keep your risk managed. Don't forget, that's the most important thing. See you soon.